we're in a day and age where everybody wants to get ahead of everything. And we know in the market there's a few ways to make money, right? You can be smarter than everybody else. That's not usually going to happen. You can cheat to get there, right? You're likely going down for that if you're going to do that. The other way is be first, right? And so those are three ways you can make money in the market, right? So if you're going to go with the be first one, right? Well, you're not going to wait to May to sell your stocks. You're going to get it done in April, if that's your belief. And if you're somebody that wants to dump out of shares and then buy back at some point in the summertime or fall time, okay? And so naturally, I think what's going to end up happening is it's really going to become sell in April and go away rather than sell in May and go away, because people are going to want to get ahead of that. And by the time you get to May, you might not see any further sell-off unless there's something systemically going on, like something bad in the economy or just in the market in general. Earnings are taking something that is an extraordinary event that takes the whole market down. But I wouldn't be surprised if in the future you actually see strength in the month of May and more selling pressure in the month of April overall. So that's the bottom line, man. We're in that. You ever notice how, you go to a store nowadays and like they're already decorated for the next holiday months ahead of time? It's like you start seeing Halloween decorations at Target when it's still like August, man. It's like, holy smokes, man. I think Halloween's a little bit away. You start seeing Christmas decorations before Halloween's even happened at that point in time, right? You start seeing Easter stuff as soon as they take down the Christmas stuff. I mean, that's just the day and age we're in. Everybody wants to be first. Everybody wants to beat everybody to the punch. And it's no different in the market, okay? These big banks have gotten away with the last, let's call it number of months here, basically giving their customers no returns or limited returns on, let's call it a savings account, CD accounts and things like that, right? And so a lot of people are looking around now and realizing, gosh, if I put money in treasuries, oh boy, okay, I can make a great return. If I move my money to maybe some of the smaller banks, like let's say an Ally or whoever, right, where you can get, let's call it a 3.75% yield, 4% yield or whatever on a savings account, CD accounts at a yield 4% plus. People are going to start moving money out of the JP Morgans, which as a stock I personally own in my dividend account, okay? But they're going to start moving money out of the JP Morgans and the Wells Fargos and the others if these banks aren't going to give them good returns, because people are starting to realize, oh my gosh, I can actually make money on my money again for the first time in the last, 15 years? Literally, this is like the first time in like the last 15 years or so that you can actually make a decent return out there. If from a savings account, but not with the biggest banks. The biggest banks are a joke as far as that goes. And so that's going to be a big problem, because some of these big banks could actually see money flowing out because people are realizing there's other places to put money, whether it be treasuries, savings accounts, CD accounts, in ones that are actually going to want to compete. And at the end of the day, if these big banks don't want to see their clients' money going bye-bye, right? What they're going to do, they're going to have to up what they're actually paying out to be competitive in the market. So I think the big banks are hoping the Fed cuts rates as soon as possible and rates start going down as soon as possible, because as long as that happens, they'll be fine as far as money outflowing. But I'm telling you, the longer rates are high and you can get really good money on savings accounts, CD accounts, and other things from other competing banks, that's when money starts to flow out more and more and more. So the longer rates are high, I actually think it's a worse situation for the big banks overall. And that's not even talked about. Everybody's only talking about like, oh, regional banks in trouble, so people are going to move money from a regional bank over to one of the big dog banks. They don't speak about the other stuff. If we have a scenario in which, let's say the recession does come, let's say it's, I don't even want to say a super bad recession, just a mid-recession, okay? And we see a continued slowdown, or just, let's call it residential real estate in a really tough place, commercial real estate in a really tough place, big projects in general, anything construction related that's let's call it non-government related, right? Because you're always going to have government spend, state spend, federal spending on different construction projects, right? Highways and roads and all that stuff. But I'm talking about building a new stadium. I'm talking about building a new hotel over there. I'm talking about building a new apartment complex, right? A new resort over there, a bunch of new homes, and everything like that. If we continue to have a slowdown there, it's going to hit all the banks in a major way, right? Because banks, let's be honest, all those big projects are almost always funded by debt. And many times those big banks are the beneficiaries of that. And so that's something important. And also, if you're in a contraction cycle like that, right, there's not as many businesses taking out loans in general that might benefit from those different projects and whatnot, right? So there's so many loans and so much debt and opportunities for banks out there when everything's going right. But when you see a major contraction or slowdown, it does hit the banks pretty significantly. And you see a bank recession over the all, okay? And so there's just something to kind of keep in the back of your mind. That's why I don't own a lot of banks. I own JP Morgan, which is just kind of like a long-term hold for me in my dividend account. I wouldn't mind buying some more JP Morgan in the future, but am I super excited about the banks for the next 12 months? No, I'm not, to be completely honest, okay? AMC stock. This stock is down to the 23% here today. It's back in the $3 range now at this point in time, okay? I think AMC is just a good example for us. All of us investors, right? Because the story about AMC was, oh, you know, we're going to get the short sellers, we're going to make so much money off this and all that stuff, right? And you see, obviously, what's happened with this company. Like almost everybody that's ever been in the stock got absolutely obliterated, unless it's from the short side, right? I mean, this is a stock that's down, what, 90+% from the highs now at this point in time, right? And down 72% just in the past year. And I think it's important for all of us just to remember, stick to the fundamentals of this game. If you're going to try to out-manipulate Wall Street, that's like saying you're going to beat LeBron James at a game of one-on-one basketball, okay? It's not going to happen. You're going to get your head dunked on. They're the masters of manipulation. If you think you're going to out-manipulate the manipulators, believe me, you're going to get wrecked, okay? And so just keep in mind, you've got to invest from the fundamental side with companies. And what I always saw as a problem with AMC is no one invested in that company from the fundamental side. No one was like, oh, theaters are going to be so great. Theaters are going to be packed again, you know, and it's going to be just great, and it's such a great business model. And no one was investing from the fundamental side. They're investing from the short squeeze side and all these technicals and all this BS, okay? And look what they got for it. Absolutely nothing, okay? And so at the end of the day, there's a lot of risks. You know, we got to stay away from the market. Unprofitable companies is definitely a problem, and that's a problem that AMC's had in the past. But also, if you think you're going to out-manipulate the manipulators, I just tell you you're in to get your head dunked on, okay? It's not going to happen. Look at this baby. It's at an all-time high. McDonald's stock is at an all-time high, and they're still doing layoffs, okay? They're still going to do layoffs with the stock at an all-time high right now. That goes to show you that companies are using 2023 as a year to lean up their organizations regardless of how their stock price is done. Regardless. It doesn't matter. And the bottom line is for big corporations, they only get these opportunities to do these big layoffs, corporate cuts, things like that, really maybe once every 5 to 15 years. And so when you get one of those opportunities where you can cut employees and no one's going to ask questions about it, you've got to take advantage of that. And it really started in 2022 with a lot of the tech companies, right? But it's followed through now with a lot of these other random big companies now at this point in time. And so as in McDonald's, like, this is your one opportunity. You might not get another year to have big layoffs like this for another 5, 10, or 15 years. And so you've got to take advantage of that, because when times are great, when you know most other companies are hiring, if you're firing, it makes your company look like you're in a bad spot. You're doing a bad job running your company. But right now, for this year, you cut employees, no one asks questions, and everybody claps for you. Everybody claps for you. I can tell you that's not the situation when everybody's out there hiring and you have all those sorts of moves out there. So it's a really fascinating time going on out there in kind of the workforce area right now, right?